Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, everyone, welcome back to another crazy week. I can't believe it's just January with all the up and downs that we've had in the market so far. If you missed it over the weekend, news kind of rocked the normal tech world, and particularly AI around something called DeepSeek, which is basically China's AI model that they have come out with, claiming that they can produce it at way lower costs than way lower costs than OpenAI, Meta, and others have claimed they can do, which has basically led to a re-rating in some of the tech stocks. There's still a lot, the jury is still out on DeepSeek, but it is open source, so folks can actually go and look at it. And that is kind of what is different, or the differentiator there versus other, closed source businesses, that are potentially operated by the Chinese government, such as TikTok, WeChat, etc. Now, the other big news was we just had the FOMC meeting. There were a lot of positive things in there about crypto specifically. Actually, Fed Chair Jerome Powell mentioned that banks could service crypto businesses. He did mention, there was also talk from the incoming one of the incoming cabinet members about that stable coins should be audited, but definitely supported within the US framework. So a lot of still very positive things on the horizon for crypto, but we definitely saw a really big sell-off starting over the weekend in a lot of crypto AI names. And that has definitely weighed heavily on the sector. But as always, we have some tokens to talk about, so we will get right into it. So to start, we're actually going to talk about Anime Coin. So last Thursday, the Azuki NFT collection launched their fungible token called Anime Coin, or Anime for short, in an airdrop launch. So if you're not familiar with the Azuki NFT collection, they're basically, they started off in 2022. They're a collection of 10,000 NFTs that are kind of featured around anime art. Since then, they've had some offshoots called Elementals and Beans from the Azuki collection, but they've remained as one of the stronger NFT collections in terms of community. Now, the token itself is considered a culture coin, the anime token, which basically means it doesn't have any value. It's meant to be kind of another part that you can build in the community of anime, of Azuki, sorry. So the token, though, it's been distributed 50% to the community. 2/3 went to holders of the Azuki NFT, and related NFT collections. And actually, a third was distributed for other communities, including Hyperliquid stakers, Kaido yappers, and Arbitrum communities. Ultimately, Azuki is aiming to build a Web3 anime network, which is going to be built on layer 2 Arbitrum and use the anime coin for gas. So that is somewhere in the future. The token initially had a pretty strong launch with a $614 million market cap, but it ultimately fell and is now down at about 257 million. It is down about 74% for the week. Ouch. Okay. Next up, we're going to talk about an AI name. So AI Rig Complex, or ARC, is a pretty newly launched AI agent framework. They announced yesterday that they're actually going to be one of the Solana Foundation's partner AI projects. So basically what this means is that they're going to be providing grants to developers using that framework on Solana. And then those same teams are also going to directly benefit from having access to the Solana Foundation resources as well. So Arc is pretty differentiated from some of the other agent frameworks out there. And then it's written in Rust programming language, which is supposedly kind of easier for Web 2 developers to learn and use. Rust is also what Solana is built on. So again, easier to learn and use. I should mention, if you're also wondering, what is an AI agent framework? So if you want to launch an AI agent, so that is an autonomous agent that can go and do things for you, whether it's, hey, I want you to tweet every time the price of Bitcoin goes up or down, or you can make it do more complex actions, such as I want you to, be my personal assistant. Basically, there are basically frameworks where you can say you can go there to place like Arc or the other frameworks such as Eliza OS. You can go to them and be like, okay, I want to design my agent framework without having to write like a whole code base and a large language learning model from the ground up. So that's why these agent frameworks are so important, because they really drive like the creation of all the AI agents that we have in existence today. So this was, pretty great for AI, for Arc to get this partnership with Solana. They've been doing pretty well since they launched in December. They quickly gained a lot of traction. They're now the second most widely used framework after the Eliza framework, according to the GitHub stars, which can be a little unclear. But the token unfortunately didn't hold its gains here. Like I said, the AI sector got pretty hard following the DeepSeek news over the weekend. The token did initially shoot up about 30% on the announcement, but it has since retraced and it's now down 36% for the week. Okay, so remember how like 2 weeks ago I was like, there's some issues over at Thorchain and maybe they're going to get resolved? Yeah, those problems are definitely rearing their head again, in a much bigger way. So 2 weeks ago, like I said, I covered how Thorchain's lending product Thorify was essentially unable to meet their obligations to repay collateral if all the users redeemed. So that issue, again, was exacerbated a few days ago. Community member came out, announced Thorchain is now insolvent, and unable to meet its obligations. So with that, what happened is that they basically decided again to pause the protocol. If you remember, I explained that Thorify has a very odd setup where basically every time users, if it basically causes downward price pressure on the RUNE token every time users come and redeem a loan from the protocol and get their collateral back. And as a result, the protocol doesn't have enough collateral to meet all of the loans that it has outstanding. So since then, the community's really come together to try to come up with a proposal to figure out a solution here. A proposal was released last night, and it proposes unwinding the protocol altogether and offering kind of what they're calling tokenizing the debt, but basically offering like IOUs on that debt, which will either be paid down over time using revenues as a long-term solution, or users can buy it with, kind of as like distressed debt. So the proposal is still in discussion, does seem to be well received so far, but I think this will take a little longer time to work out. In the meantime, though, the RUNE token has definitely gotten crushed. It's down 34% for the week. All right, Jupiter. Last one up. I promise this one is good. Not as depressing as the other one. So over the weekend, decentralized exchange Jupiter held their Jupiter conference with a ton of bullish announcements. A quick primer, if you're not familiar, Jupiter is a decentralized exchange, technically an aggregator built on the Solana network. So that means that they basically offer like a nicer front end for users to trade, but they offer spot exchange, they offer a perpetual futures exchange, and they're actually planning on offering new products going forward. So a couple of their announcements included they've acquired a majority stake in Moonshot, which is a meme coin trading platform. They also fully acquired Sonar Watch, which is a DeFi portfolio tool. They're planning to release a new version of the Jupiter platform. It's already launched in beta, and that's going to have updated UI, new order types. And then they also are working on something called JupeNet, which is a product that's going to allow for multi-chain aggregation of trading and portfolio management of your assets all in one place. That's just in testnet. So these are big developments to come. Finally, though, the really big news that just made this fly higher and has kept it going is the project announced it's going to be doing a buyback of their tokens using 50% of protocol fees. Now, that doesn't seem like too much because they actually don't take fees on the swaps, which is what majority of their volume is comprised of, but their perpetual exchange where they're earning the most, earning the most fees, that actually has about over $100 million in fees. So not a drop in the bucket in terms of protocol fees for them. And then finally, there was a proposal posted on Sunday that suggests burning 1/3 of the total Jupiter supply. And that looks like so far it's going to pass. Now, this sounds all great, right? But the timing of this conference is, no coincidence. Jupiter's first unlock is actually coming up on Friday, and they're going to be delivering a giant 185% increase in the total token supply to market. We'll have to see what happens with the token. In the meantime, it's up 35% for the week. All right, guys, I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.